All right, so if you're trading under 20 contracts, you're okay. All right, Theo, any other questions? All right, so there's a long signal here. The idea is the same, right? I would rather get 30-50, right? 30-50. Don't chase it. So as an example, if it runs away from you, let it go. We have a ton of trades. We have a ton of signals. We don't have to, um, chase this with bad fills. If you get within a tick of 30-50, fantastic. And it's the same signal for the 10 range as it is for the 1 minute chart. And I have the 10 range because Alan, you recommended it. Let's take a look at the 2 range just to see if it gave the same signal. Nope, it 30.48.75. So the signal was 30.48.75, a little bit different. And you also recommended the 5 range, right? The 5 range. If you have a signal to go short, obviously you can't be long and be short in the same market, right? You have to have a stop. You have to have a target. If you look at the ATR, it's healthy, nice healthy ATR at 3.71. So your target should be roughly about 3.5 points, 3.25 points, 3 points. I think that's a good healthy target. If this does not turn around and go up and make that target, remember we're not holding on to this. If you get a stop, you get a stop, and you're out of the trade and you look for the next signal. And a lot of traders, they don't just have the E-mini S&P up, they have multiple markets. Not a bad idea if you want to look at a variety of markets all trading at the same time. So that's one thing that I know a lot of traders ask me, can I add the software to multiple charts all at the same time? And the answer is yes. The answer is yes. Now, I put a video out and I want to show you something that I think is important for us, maybe long-term traders, maybe on a day trading basis for opportunity. So I'm going to put here a daily chart. And the daily chart, when I put the video out, was roughly here around mid-April, end of April, maybe here in beginning of May. I don't remember. I have to look back. But you can look back, and there was a video that I did. And the video that I did was based on what happened, the current conditions of the market, what we're seeing, this huge sell-off that occurred. And at the time, I recommended looking for a buying opportunity. And a lot of people wanted to sell at the time. And so I'm showing you this because there's still opportunity. You're not out of the woods yet. So let me show you here. Market started to climb here all of last year. And then we see this terrible sell-off that occurred. At some point, the market stops and starts to come back up. So we all saw this. We're all following along. Those of us who are news junkies, right? We follow the news and follow the financials. So here is what I recommended, and I think we have a new opportunity as we speak. The market came down to a certain level and began to climb. I think that the way that markets work, they love to test highs and lows, and unless there's a reason for the market not to test those highs and lows, maybe a slow environment, it's choppy, we have this opportunity to test these highs. And I still think that before the election, the market will hit these highs and surpass these highs. So here is my suggestion, and this is what I taught in the video, what I showed you in the video. Once the market hits the 50% marker, it's a milestone. The milestone is that it typically hits this area and goes straight up. Now, we've seen this over the years. It's called the January effect in a different way of looking at it, right? I teach the January effect every year. And here is the opportunity to buy it every time it dips below the 50% marker and dips back above. And the idea is to get long and hold it if you're a long-term trader until it hits the highs. Trailing stops are a good idea. I have a few trailing stop videos out there. If you haven't seen them yet, I would recommend you go to the blog or the YouTube, DayTradeToWin YouTube channel. There's a lot of videos that I do, a few of them on trailing stops. And those of you who are in the mentorship class, I think Cheryl, you are joining the July 7th class. This is something that we teach the trailing stops as well. Okay, so what we're looking at is the opportunity to be a buyer, testing the highs. Where do we go long? Well, typically once it breaks the 50% marker, it means the milestone has been met and we're on our way up. But with the type of volatility that we have, there's these huge swings down and huge swings up. It's almost impossible as a swing trader with these type of moves, 50 points a day or more. 30 points a day is typically the average a few years ago, but now we're talking big numbers. It's impossible. I don't expect anybody to hold on to these big moves when it goes against you. So in a day trading fashion, as long as we're above the 50% marker, leading our way up to the highs, which are here, look for any pullback opportunity. Look for any day that starts off strong, that is completely bullish. Look for this high right here to be broken and then go long. Any opportunity that you have to go long. Now, it could be long opportunities on the scalper. It could be long opportunities on the Atlas line, another software that we offer. It could be long opportunities on the blueprint. Another method that I teach is the blueprint method. So any opportunity to go long, whether it's what I offer you or your own type of trading, take it, because you're going to see that at some point the market will hit these highs. We can't hold on to these large moves with large stop losses because it's impossible for the regular trader to do that. But if you have an opportunity to go long, so I see here the market pulling back. Let's just talk about today and the last few days. When this market begins to turn around and go up, that's your opportunity to be a buyer. It may not be today, it may not be tomorrow, but you'll see the market either go flat and then start to climb up. Take that opportunity to be a buyer. Whatever software that you're using or method that you see fit, buy it, because this will absolutely, in my opinion, for the years of looking at markets, this high will be tested. I'm not sure if it's going to break through it with such fury. It may get stuck there for a little bit and then start climbing slowly, but this market wants to go higher. And here we are. Okay, so this is something I wanted to show you in case you're wondering what the future brings as we end into 2020 and go into 2021. And then we look at the January effect and all the other methods that exist for 2021. So this is what we're at here. Okay. Questions on that? Pretty straightforward, right? Looking at a huge pullback, looking at the market coming back above 50%, and then taking the opportunities to be a buyer. Doesn't have to be complicated, but we just have to make sure we understand what's happening at the moment. Okay, we have the trade scalper. We have long-term vision for the market. We have the ATR, which tells us the conditions that exist. We have news that comes out. I have here the news indicator. I offer this as a free trial. So if you haven't downloaded the news indicator, you can download the news indicator. All right, excellent, good. Sometimes, so the question I have here is, what happens when the market is in a big chop zone? So the market could be going up and down and up and down. Do we use support and resistance? And the answer is yes. I think support and resistance is very important. It depends on, obviously, the markets that you're looking at and how tight that support and resistance is. So one of the things, the question is, do we look at support and resistance when we trade? So if you look at here, let me just come back here a little bit here. All right, like that. If you look at these candles here, this is 1 minute, obviously. So you see how the market hits some type of resistance here. Well, I don't think that one candle by itself is meaningful at all. I think that when you have a grouping of candles hitting resistance, it's important. So as a trader, think a little bit outside the box. Don't always think of large green candles as opportunities. Think of the wicks instead showing you that the market is trying to do something and failing. So resistance and support is not just numbers and values and prior highs and prior lows. It's the multiple attempts. So think about this for a minute. The multiple attempts of the market trying and failing at a certain value. So when you see one candle with a large wick and it failed, it may be meaningless at the moment. When you see another candle trying and failing, again, maybe it's meaningless, but it's starting to paint a picture. So if you're looking at price action and you're not really looking at any type of other indicator, think of this as resistance is beginning to form. The same thing with this candle and the same thing with this candle. So I'm not sure that I want to be a buyer after this has attempted multiple times and failed. I instead would rather look for a shorting opportunity once it fails and starts to reverse. So think of it a little bit differently. Don't look at large green candles and large red candles as the opportunity to be a buyer or to be a seller, because typically that's the last push. When you see large green candles, it's not a good opportunity. Think outside the box. Look at these wicks and say, it's trying, it failed, it tried, it failed, it tried, it failed. I actually call these yo-yo bars. Again, another video that you may want to watch on yo-yo bars. Just do a search on the Day Trade to Win blog or on our Day Trade to Win YouTube channel for yo-yo bars, explaining how to really count for this. And you want to be a seller. Now, the first time that it tries to go up, like I said, it's meaningless. You can still be a buyer. It still wants to test these highs. It still has an opportunity to go long. But multiple attempts of it failing with these wicks, think of a yo-yo. There's something stopping it. Look for the short. So that's just an example of support and resistance, a little bit different probably than you're used to thinking. This here, maybe the same kind of situation. You see how the market tried and failed. Here's another one. And then none of these candles really had any opportunity to go lower, not even the wicks. They just kind of stopped. Look for a buying opportunity. Multiple candles are indicating that. Okay. Questions on that? Mary says here, can you review how to update one's clock on your computer? Mary, is this the same Mary that's in the mentorship class? Updating your clock, Mary, there's a video that we put out recently that indicated how to do that. There's a few different ways to do that, okay? I'm not going to go into that right here because my taskbar is on a different monitor. I have multiple monitors. But if you can, send me an email, support@daytradetowin.com. Say, this is Mary. I want to know how to update my computer clock. I'll forward you the video and I'll give you some instructions on how to do that. Link there, Mary, for you. Thank you, Chad, for doing that. But if you still have questions after reviewing that video or that setup on updating your computer clock, just send us an email, Mary, okay? So here is something that I'm going to show you that we update constantly. I'm just going to go here to the Day Trade to Win page. And if you come here to the Get Started tab here in the menu, and you go to How to, Info, and Setup. So this is something that we've been adding and creating whenever questions come about and traders say, well, how do I do this? And what if this happens? And how do I, open charts, add a data feed, sync my clock, optimize my computer? So we update this on a regular basis, recently more so because of the questions we get. And there's typically a video that goes along with it. And so we have this area here really focused on traders that want to learn a little bit more on the technical side of trading, whether it be more charts, whether it be loading charts, whether it be workspaces, whether it be how to roll over your futures contract, which is very important. There it is, and how to keep your computer time accurate right there. How to use market replay, how to organize your charts. So I think this is a good wealth of information for those of you who want to stay with the greatest and latest that's available out there. Okay. So visit this page here, how to and setup info. So we talked a little bit about the orders. We talked a little bit about support and resistance. I just want to show you here. I'm going to give you a very clean example as it's happening. This wick stopped the market from going higher. It's irrelevant. It's just one candle. It's just one wick. Let me just put it like that. It's irrelevant. So the truth is, it's meaningless. And then we have the market trying a second time, a third time, a fourth time, all at the same price, but it's the wicks that give it away. Now, I'm not sure if the market is going to break through this or not, but if there's a signal to go short and it starts to pull away from that, that's an indication that there's resistance, that the market attempted to go higher multiple times and failed, that yo-yo effect with the wicks. Now we have something to look forward to. Now we have something that we can sink our teeth in and say, I'm going short for this reason. Or if it breaks higher, which it could, I'm going long for that reason. I'm going long because it broke through the resistance where it got stuck at, and now there's these long trades occurring beyond that. So think about how the market moves when it stops, when it continues, when it reverses, when it pulls back, when it retraces. All those things, they may seem uh, complicated, but they're really not. The one thing that I recommend is not to have a chart that is this large, because I can't make heads or tails of where the market is coming from and where the market is going. It's just these large candles that doesn't really help me. If you crunch up your chart a little bit, you can see where the market is coming from and where it's going. Don't forget to use here the crosshair instead of just a cursor. So if you just have a cursor, it doesn't really help me with the scale on the right for the price or the time, because I have to guess where this closing price high and low happens to be. But if you use a crosshair, you can see and put your crosshair exactly at the high and exactly at the low, or exactly at these highs to get price and time at the same time. Hey, Dejan, glad to hear from you. Hope all is well with you. All right, so we talked a little bit about the orders. We talked a little bit about the support and resistance. Looking forward till the end of the year, we're also looking at buying the market if there's an opportunity. It doesn't matter what you use, if you use the Atlas line as an example, or you use something better, take it. I think you have a great opportunity to be a buyer. Okay. So we see a signal here live 30.52.75. Remember, the entry should be as close as possible to 30.52.75. If you're getting long a few points above that, obviously it's not the intention. The intention is to get as close as possible, not chasing this market. That's important to understand. 3 points, right, exactly. So for those of you who are new to looking at the ATR, the way that I teach it, the ATR says 3 points. This candle from high to low is able to make 3 points. You don't necessarily have to take the full 3 points, but at least you know what to expect. 2.5 points, I think even better, you're able to achieve that. The stop, it's irrelevant. Relevant stop. If the ATR is 3 points and the market could move up or down 3 points, it's impossible to trade with a 1 point stop. It's impossible. It's never going to happen, because that 1 point will just take you out in an instant. So you have to have a stop that is relevant and a little bit more than the current conditions, just to keep you in the trade. And that's something that you have to adapt to. It's not the same stop and the same target for every single situation and every single trade. It's an adaptable feature. And if this slows down, let's say that the next candle is smaller and this goes down to 2.5, and the next candle is smaller yet and it goes down to 2 points. Same idea, adapt to the situation, move your stops, move your targets, and understand that the market is slowing down and you have to do something about that. Same idea, same exact idea. Okay, let's talk a little bit about percentages, a little bit about risk, a little bit about expectations as well. This is important because a lot of traders have big expectations. They see a lot of money that could be made. And it's true, you can make a lot of money trading. But on the flip side, you can also lose a lot of money. And when you start trading, the new traders, for example, those of us who have traded, lost, recovered, made, we know, we understand what's involved here. But for the new traders, I want to just focus a little bit on expectations because we see a lot of signals, we see a lot of videos, we see a lot of opportunities, but it's not as easy as that. You have to expect that some trades will be losing trades. You have to. You have to stop trading once you have, for example, two losing trades in a row. Stop for an hour, recover, let the market change its flow, and then get back in. So those of you who are looking at this presentation new from the beginning, there are opportunities, but you also have to be very careful. I don't recommend new traders start trading right away, live, jumping in. Take it slow. Practice. We offer a simulator through NinjaTrader with live data to help you practice, especially those of you who are members. You're able to have and practice with us so you know what you're doing before you open an account, before you start trading. You don't have to open an account to practice. You don't have to open an account with any broker to join DayTradeToWin, but it's important that you start slow. So my goal is to start you off slow and right. Begin your learning experience by practicing, asking questions. Ask a lot of questions. If you don't understand something, typically we get hundreds of emails a day, sometimes less, sometimes more. We can't always answer the questions that are unrelated to trading when it comes to brokerages and things because we're not a broker, but we can help our members understand what's involved with trading. So I recommend everyone download the simulator. There's a simulator access here under here, simulator, and you can also go to the get started page right here where you can get started, get the get started PDF where it also helps you understand everything that's involved with getting started. So don't just jump into it, take it slow, understand the meaning behind what trading for a living is all about. Now, if you look at this signal here, 30.52.75. So I'm going to take this very slow. I'm going to expand this out just so we can see it. Okay. So 30.52, see if I can move this out of the way. 30.52.75 is right here. This is the entry, 30.52.75. That's where the little arrow is there. Now this candle closes. You see the signal. You want to go long. 30.52.75, 30.52.50, 30.53. You just want to be long. Okay. So this next candle comes down and fills you here. But if you use a limit order, chances are you may not be filled. So it's not always that you're going to get filled on a touch using a limit order. But if you used instead an MIT order, market if touched, everybody at this price got filled. The only problem with using an MIT order is that you have to expect slippage. So sometimes you get the exact price, sometimes you get a tick off, sometimes you get a better price, but using an MIT would have been the only way to get filled for most of us once this low of this wick touches this entry price. So I want to be really clear on how this works. This entry occurred, you place your order to go long, limit order may have not have gotten filled, MIT definitely. So if you got filled at 30.52.75, which is exactly here, 30, 52, 75. The ATR 2.9, right? 2.9. So if it's 2.9 from here to here, it's 2.5 points. It made pretty much exactly what the ATR was indicating. That's how you use the average true range, the ATR, to dictate the specific target on any trade. Because if I wanted 4 points, 4 points isn't possible. If I wanted 2 points, it's possible. If I wanted 1 point, it's possible. If I wanted a point and a half, it's possible. So use this ATR to dictate the target. That's the best way that you can manage every trade they get in, because some trades go for more, some trades go for less. That's very important to understand. Yeah, let's take a look at, I think, the range chart, right? Somebody was asking about the range chart here. Okay, so long trade 30, 50, 75. Not sure if how much different that was here. A little bit better entry here on the range chart. Same thing with the short here, 30, 44, 50. Just as an example, I'm not sure if we saw this signal already, but you see this appeared, this is the entry, and you're out. So that's on the range chart. So those of you who are interested in trading using the range chart, or interested in using the 1 minute chart, you can absolutely do both if you wanted to. Right. So every candle is range of 5, which Alan recommended, and we'll take a look at the range of 10, just to kind of give you a different perspective. There's no signal to go short on the range of 10, but there is a long, long, long. So a little bit different, but the orders are similar. All right, so those of you who have the Trade Scalper or who purchased the Trade Scalper, remember Thursday, 10 o'clock, we have a client-only, member-only trading class. Right, so we go over the entire method, how it works, targets, stops, how it's calculated, and all that good stuff. If you're interested in joining the July 7th class, it includes the Trade Scalper, the Atlas line, the roadmap, the at the open method. It includes all the software, all the courses in one discounted package. So if you're interested in joining, July 7th, we begin. Everything is recorded for you, so even if you can't attend live, all the classes will be available to rewatch on demand as well. If you want to learn more about trading, visit DayTradeToWin.com. Subscribe to the DayTradeToWin YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.